Hello everyone, this is Bhavna Mehra and today I have come up with an incredibly imperative topic in the field of economy and business, and that is the latest banking trends, and I'm confident that it will surely enrich your information related to the content. So if this is the first time you are watching my video or visiting my channel, make sure you hit the subscribe button and click the notification bell to be the first one to know about my uploads on economy and business. So let's begin. Before the coronavirus crisis, retail, corporate and private banks were already under pressure from big tech firms and payment players. They needed to transform their technologies and cultures to create engaging digital experiences. And with the effect of pandemic, the need for transformation is now even greater. Here in this video, we will see what major reforms are there in banking industry, and we'll also discuss some of the current happenings in digital payment system. So starting with CBS, that is Core Banking Solutions. Core banking became possible with the advent of computer and telecommunication technology that allowed information to be shared between bank branches quickly and efficiently. Before the 1970s, it used to take at least a day for a transaction to reflect on the real account because each branch had their local servers and the data from the server in each branch was sent in a batch at the end of the day. Over the following 30 years, most banks moved to core banking applications to support their operations, creating a centralized online real-time exchange or environment. This meant that all the bank's branches could access applications from centralized data center. Deposits made were reflected immediately on the bank's servers, and the customer could withdraw the deposited money from any of the bank's branches and also could perform basic transactions from any of the member branch offices, therefore changing the traditional branch banking into branchless banking. So now to understand more, core banking is a banking service provided by a group of networked bank branches where customers may access their bank account. Competition in banking industry is intensifying. Next generation banks using core banking software are winning market share by targeting lucrative niche in the value chain, forcing the incumbent banks, that means the current banks, to review their legacy platform. In fact, according to a McKinsey survey from May 19, more than 65% of surveyed banks are exploring the potential of next-generation core banking platforms, and 70% of banks are now actively reviewing their core banking platforms. Developing a core banking software in-house is a complicated and time-consuming process that can overwhelm teams and delay product launch. So, very few banks have their own banking platforms. But the good news is that there are a lot of core banking softwares to help banks modernize quickly and efficiently. Let's discuss few of them, starting with Temenos. Founded in 1993, Temenos is one of the world's top core banking software systems. After over 25 years of providing best-selling bank software for financial institutions, Temenos boasts unbeatable experience and a wide range of system integrations. Recently, Temenos announces strong recurring revenue growth, up 17% in Q2 of 2020. Yes, in this pandemic year, and also expecting gradual improvement in Q3 and Q4 of 2020. Next is Finacle. Finacle, developed by Infosys, is a cloud-based core banking solution that helps financial institutions modernize their core banking capabilities. The platform is used by banks in 100 plus countries and serves 1 billion end customers worldwide. Now, talking about TCS BaNCS. It is a core banking software suite developed by Tata Consultancy Services for use by retail banks, but Prior to the corporate takeover by TCS, BANCS was developed at the headquarters of Financial Network Services, that is, in Australia. Now, the most important, the CBS of RBI, the Bankers Bank, and that is eCubeir, which gives high degree of access to commercial banks and other institutions to their current account with the RBI. The eCubeir system was implemented in 2012 and is considered as one of the successful central banks administered core banking systems in the world. RBI's eCubeir system can be accessed either through Infinet or Internet. Infinet, that is Indian Financial Network, is a closed user group network for the exclusive use of member banks and financial institutions and is the communication backbone for the national payments system. Now comes the digital payment system. Digital payment means a payment transaction in a seamless system effected without the need for cash. This includes transactions made through digital or electronic modes, wherein both the originator and the beneficiary use digital and electronic medium to send or receive money. Reserve Bank has been taking many initiatives for encouraging digitization of payments in the country. Significant inroads have been made in making available a variety of digital payment options, and with time, their usage has increased. The digital payment system includes two kinds of settlements. One is real-time basis, it means immediate, and other one is deferred settlement, means delayed settlement. When we will see to the current digital trends, then the most used are RTGS, that is real-time gross settlement, IMPS, immediate payment service, then comes NEFT, National Electronic Fund Transfer, UPI, Unified Payments Interface, NECS, which is popularly known as ECS, that is Electronic Clearing Services, and NACH, which is a National Automated Clearing. It is evident from the chart shown that IMPS, RTGS and UPI are real-time settlement payments, whereas NEFT, ECS and NACH are delayed settlements. We will cover UPI, that is Unified Payment Interface, in another video, as it has shown a tremendous usage and growth within few years only and is one of the most used digital payment mode for general public. So let's discuss other payment systems here. So we'll begin with RTGS. RTGS, that is real-time gross settlement, is an electronic form of fund transfer where the transmission takes place on a real-time basis, that means instant basis, which is owned and operated by RBI. Transfer of funds with RTGS is done primarily for high-value transactions, the minimum amount being 2 lakh with no upper or maximum ceiling. The beneficiary account receives the funds transferred on a real-time basis. But RTGS is not a 24/7 system. The RTGS service window for fund transaction is available to banks from 7 a.m. to 6 p.m. on a working day. However, the timings that the banks follow may vary from bank to bank. RTGS is a credit push system, that is, transactions can be originated by the payer or the sender only to pay or remit funds to the beneficiary. With effect from 1st July 2019, the Reserve Bank has waived the processing charges levied by it on other banks for RTGS transactions. Banks may pass on the benefit to its customers. However, with a view to rationalize the service charges levied by banks for offering fund transfer through RTGS system, a broad framework of charges has been mandated by RBI. As you can see from the chart, for inward transactions, no charges are levied, And for outward transactions, the charges levied on the transaction from 2 lakh to 5 lakh should not exceed rupees 24 and 50 paisa, which is exclusive of tax and if any. And above 5 lakh, it shouldn't exceed 49 rupees 50 paisa. Therefore, banks may decide to charge a lower rate, but cannot charge more than the rates prescribed by RBI. According to the data accessed by the Indian Express, the month of March in which the national lockdown began saw a sharp rise in digital financial transactions countrywide. And according to the latest RBI data, the total value of RTGS transactions, the biggest online payment method offered by RBI, rose 34% across banks to rupees 120.47 lakh crore in March 2020 as compared to rupees 89.90 lakh crore in February 2020. The usage of cash and other cash-based services, however, dipped during the period, the data showed. Cash withdrawals from ATMs as well as usage of various cards like debit cards, credit cards have also gone down significantly. Banking industry sources said this. Next is NEFT, which is a deferred settlement. NEFT, also known as a National Electronic Fund Transfer, is an electronic payment system. It helps in the transfer of money from any bank branch to another individual, firm or company having account with any other bank branch in the country. So it is a nationwide centralized payment system owned and operated by RBI. It was introduced in 2005. There is no minimum and maximum limit imposed by the RBI for fund transfer through NEFT system. However, banks may place amount limits based on their own risk perception with the approval of its board, as some of the banks allow maximum 10 lakh rupees transaction, whereas some banks allow a transfer of rupees 25 lakhs. NEFT presently operates in batches on half-hourly intervals. Now, the most lucrative part with NEFT is that it is available round the clock on all days of the year, that is 24 into 7 into 365 basis, unlike its prior availability to users for fund transfer during banking hours only. Now let's see the charges levied by banks for NEFT transactions. All the inward transactions are free of cost. That means no charges to be applied to such transactions on beneficiaries. But for the outward transactions, there are some charges levied on the remitter. As for transaction up to 10,000, charges imposed should not exceed rupees 2 and 50 paisa. Above rupees 10,000 and up to rupees 1 lakh, it will be maximum rupees 5. Then above 1 lakh and up to rupees 2 lakh, 15 rupees, and beyond that, the maximum charges levied will be rupees 25. Similar like RTGS, NEFT is also a credit push system, that is, transactions can be originated by the payer or sender only to pay or transfer funds to beneficiary. Any individual, firm or corporate with a bank account can transfer electronically using NEFT. But the beauty of NEFT is that any individual without a bank account can also transfer funds by visiting the bank branch and depositing cash, which is also restricted to rupees 50,000 per transaction at the NEFT enabled branches only. Besides fund transfer, NEFT system can be used for a variety of transactions, including payment of credit card dues to the card issuing banks, payment of loan EMI, inward foreign exchange remittances, etc. It is also available for one-way fund transfer from India to Nepal. Now, how to do NEFT transfer? An individual, firm or corporate can make NEFT transfers using internet banking, mobile banking, or by visiting any NEFT enabled branch. So there, primarily they have to initiate fund transfer request. Then after, register the beneficiary, and in this whole registration process, the validation time varies bank to bank. It may be from instant to few hours to 1 day. While registering the beneficiary, provide details like beneficiary name, his bank, account type, account number, and most importantly, IFS code. Now, what is this IFS code? IFS code, or Indian Financial System Code, is an 11-digit alphanumeric code with the first 4 alpha characters representing the bank and the last 6 characters representing the branch, and the 5th character is 0. And this IFS code uniquely identifies a bank branch participating in the NEFT system and also routes the message appropriately to the concerned bank or branches. As here, I have shown you the IFS code of SBI Main Branch Delhi, which is in Sansad Marg, New Delhi. Now, after providing the details, the remitter is all ready to transfer the funds to NEFT. So, does the register of the beneficiary is always mandatory? The answer is no. The sender can do small, quick money transfers using some bank's quick transfer facility without going through the trouble of adding the details of the beneficiary or enduring a waiting or validation time. In July 2018, SBI, that is State Bank of India, introduced a quick transfer service which allows customers to transfer money without adding a beneficiary. The quick transfer service allows the remitter to transfer up to Rs 25,000 per day with a cap of Rs 10,000 on each transaction. All the remitters has to do is enter the name, account name, or account number of the recipient, and then the bank will carry out a 2-step verification, for instance through an OTP sent to the registered mobile number before transferring the amount. SBI has made the facility available only through net banking, and it can be accessed on the bank's online portal. Apart from SBI, ICICI Bank and Kotak Mahindra Bank also provide similar services. In case of ICICI, the facility has a per transaction limit of Rs 10,000. Kotak Mahindra Bank one-time payment facility comes with the added advantage to a higher transfer limit. Using the bank's one-time transfer feature, the remitter can transfer a maximum of Rs 50,000 per transaction per day without adding a beneficiary. Next comes IMPS, that is Immediate Payment Service. For transferring funds in real time and 24/7/365, interbank was a major challenge faced in banking industry. Only NEFT and RTGS were available to users for fund transfer during banking hours, and at that time NEFT was also not available 24/7. With the above context in mind, in August 2010, NPCL, that is National Payment Corporation of India, conducted a pilot study on the mobile payment system with the banks like SBI, BOI, UBI and ICICI. Also the banks like Yes Bank, Axis Bank and HDFC Bank joined that league in the month of September, October and November 2010 respectively. And eventually on 22nd March 2010, IMPS, that is Immediate Payment Service, public launch happened by Srimati Shyamala Gopinath, DG RBI at Mumbai, and this service is now available to everyone in India. Therefore, IMPS is an instant payment system developed by NPCI, National Payments Corporation of India, an RBI regulated entity. IMPS provides robust and real-time fund transfer, which offers an instant 24/7 interbank electronic fund transfer service that could be accessed on multiple channels like mobile, internet, ATM, SMS, etc. IMPS is an emphatic service which allows transferring of funds instantly, which is a minimum ₹1 to maximum ₹2 lakhs within banks across India, which is not only safe but economical too. So let us have a look at the charges levied on IMPS. Amount below and equal to 10,000, charge levied is ₹2.50. In between 10,000 to 1 lakh, charges are ₹5. And from 1 to 2 lakh, the maximum charge imposed is ₹15. Now the point is how the fund can be transferred in IMPS. So basically it is possible by 3 ways. First, using mobile number and MMID, that is mobile money identifier, which is a 7-digit unique code for every mobile number. Then using account number and IFS code, a common practice in which the remitter registers the beneficiary by providing his bank's complete details, and again same like NEFT for a small amount and one-time transfer. Some banks are already providing quick transfer money option, and both of these methods we have already discussed in NEFT. Now the third one is by using Aadhaar number. If somebody's Aadhaar is linked with his bank account, then in that case by using Aadhaar number, funds can be easily transferred. So we have seen that RTGS and NEFT are handled by RBI, whereas the control of IMPS is through NPCI, which is an entity of RBI. So far we were discussing methods of payments which are not recurring or repetitive. But most of us in our day-to-day lives have to take care for some regular payments like EMI, salaries, bill payments and any kind of SIP. So in that case, RTGS, NEFT, IMP and UPI can't be used, as these payment modes are used for one-time payments. So for this we have some other measures like ECS, that is Electronic Clearing Service. This facilitates bulk transfer of money from one bank account to many banks or vice versa, especially for recurring payments. For an example, pay utility bill payments of amounts towards distribution of dividends, interest, salaries and pensions, and also for collection of funds towards telephone bill, electricity bill, water dues, insurance premium, etc., etc., etc. The service was started by RBI, that is Reserve Bank of India, providing both credit and debit. This means that it can be used for payment as well as for collection of funds. For instance, ECS credit is for making bulk payment of amounts. Under this scheme, a single account is debited and then multiple accounts are credited. Sounds complicated? Don't worry, let me explain you with an example. Let's say a company has 50 employees and at the start of every month it gives salary to all the employees. So instead of crediting each account separately, the company can use the ECS credit scheme and can transfer the salaries in the accounts of employees all together in one go. Now, similarly, to understand ECS debit, which is for bulk collection of amounts, under this scheme, multiple accounts are debited and then a single account is credited. So let us understand it with an instance. As we know, many people go for insurance policies, and so they have allowed the payment of their premiums from their account itself on some particular date. Now, it is possible that on a single day, many customer accounts are to be debited to collect the premium from them. So, in the case where multiple accounts are going to be debited, and then a single account is to be credited, ECS debit scheme can be used. To understand ECS and NACH, we will first comprehend some important keywords. So, starting with ECS Mandate. Prior to the emergence of e-Mandate, the Reserve Bank of India introduced ECS or Electronic Clearing Service. This process involves submitting a physical form, that is a mandate, to the bank or a company. But this solution isn't a very efficient one. Now, let's have a look in the whole ECS mandate process. Through ECS, each step involved a prolonged process. So, now what is this mandate process, ECS mandate process? Primarily, fill the SIP instruction and the mandate form, in which details like bank account details, scheme name, SIP amount, debit intervals, etc. are filled. After submitting these forms to the fund house, they will be couriered to the sender's bank. The bank then verifies signature and, if accepted, register the ECS debit instructions in their systems. Although it sounds easy and quick, yet this entire process of SIP registration through ECS took anywhere between 25 to 30 days and had more drawbacks. For instance, if you want to register a second SIP, customer has to go through the entire process again. And in some certain cases, banks would verify the mandate but wouldn't confirm or deny it to the fund house. This resulted in the fund house assuming that the mandate is registered. And for authentication, this always needed much details. Therefore, these inefficient and prolonged processes limited the adoption of ECS. And there was the need for the improved version of ECS, which came in the form of NACH, that is National Automated Clearing House, introduced by NPCI and RBI entity. NACH is a centralized system launched with an aim to consolidate multiple ECS systems running across the country and provides a framework for the harmonization of standard and practices and remove local barriers inhibitors. So, unlike 25 to 30 days of ECS, its activation takes place within a day or so. Then no need to submit a fresh mandate for the second SIP, in particular fund houses. Only one-time mandate, that is OTM, is required. Here, authentication requires just the net banking credentials. If there are inefficient funds in the customer's account, the transaction will not be made. Therefore, no charges are levied, as well as it is having low regulatory concern. Next is e-Mandate or e-NACH. NPCI introduced e-Mandate services to reduce processing time, make recurring payments more streamlined and efficient. With e-Mandate or NACH mandate, one can easily authorize the recurring payments by using their net banking or debit card credentials. So now, let us understand the e-Mandate process. Systematic investment planning, that is SIP, through e-Mandate is an entirely digital process. In addition, confirmation of the mandate does not take more than a couple of days. Now coming to the steps. So first step is customer log into the fund house's website and fill the mandate form details like destination bank, account number, debit intervals, etc. The fund house checks if the customer's bank is registered by the NPCI for mandate creation or not. Here, the customer authentication or or authenticates the mandate by using net banking credentials. Bank verifies the entered bank account number, and once accepted, customer is redirected to the NPCI's website and then back to the fund house's website. Here, the status of mandate approval will be shown. The mandate is confirmed at the end of the day. So that's the whole flow, and without the need for any physical process. Now, let's see the benefits of e-mandate or e-NACH for merchants and customers. So primarily for merchants. With just one-time digital authentication, e-mandate allows merchants to auto-debit their customer's account at the start of every billing cycle. This process reduces the burden on the customer to authenticate a recurring payment at regular intervals and allow them to enjoy the products and services, and ultimately helps in retaining the customers. Second, accounting is easier when the whole process is paperless and digital, as it drastically reduces the cost related to invoicing and other administrative work. Most importantly, customers' data is safe, as the PCT, that is Payment Card Industry, compliance will be strictly managed only by the payment solution provider. Now, here are the benefits for customers. First, customer has to authenticate the subscription once, and then after he enjoys uninterrupted service at any time, and also no constant payment reminders, which is always a big relief for any customer. Subscription allow a customer to purchase a plan suitable for their needs, as well as with a variety of options, inclusions, and easy termination. It provides an optimal user experience and therefore makes the services flexible for the customers. And the third one is, authentication in e-NACH is an extremely simple process. All a customer needs is his net banking credentials. The most important benefit of NACH to all is that unlike ECS, NACH provides a unique number called Mandate Registration Reference Number for future references. Now we'll quickly see the recent happenings in the field of digital payments. The MD and the CEO of NPCI, Mr. Dilip Asbe, said in an interview with ET that the data is looking better now. We saw huge dip in April but saw some recovery in May, and we are coming back to closer of the March numbers. In June, we are closer back to February numbers, and I believe the growth will continue now. Not only his words, but also the data released by NPCI on its social media handles showed a 24% increase in volume of UPI in the month of May than the transaction processed in April. IMPS showed a growth of 36%. And online bill payment systems like NACH, IBPS too recorded a healthy revival in numbers. Even RTGS and NEFT are not lagging at all. And one of the symptomatic data related to TPDDL, that is a Tata Power Delhi Distribution Limited, makes this effect evident, because Tata Power DDL, which is a joint venture between Tata Power and the government of NCT of Delhi, which has been the leader in implementing power distribution reforms in New Delhi, has received 90% payments from digital mode during this lockdown. So these all are early signs that India is finally turning into a digital payment economy. So that's it for this video. If you want me to bring more updates about this, then make sure you comment below, because I believe that with continuous interaction, we can explore more on the related topics. I will soon come with the next video, and you can join me from the comfort of your own home. I'm going to share with you more topics on economics and business. So till then, maintain social distancing and stay safe.